So we wait for a few seconds and we will start. I hope everyone has some interesting trading day if you are trading. All righty, so guys, welcome to this afternoon webinar. My name is Theo. I will present you your host for today, an experienced and very skillful trader, Jens. So Jens will take over and go through the US opening. So I'm sure you have lots of things to learn today, and you're going to gain some solid knowledge about the markets in general with Jens. So I would like you to pay close attention to what Jens has to tell you today, and I'm sure you're going to be able to learn and apply everything in the market. So before I pass it on to Jens, this is our Admiral's Instagram account, and I will definitely encourage you guys to follow us on the Instagram. I will send you the links on the chart below. And here is the Telegram account. So we post every time we are going live, and when we're going to have some important announcement about the markets, you're going to be totally up to date with that. And finally, the most important is the YouTube channel, where you can subscribe and like all the videos. Here at the Trading Spotlights, you're going to find Jens videos along with Paul and myself. So you will make sure that your knowledge, it's going to just keep up with the market. So saying that, I will pass it on to Jens, and I wish you to enjoy this amazing session. Jens, hello, how are you? Can you hear me?
Hello, Theo. I can hear you really well.
Okay, that's
hope
fantastic.
You're doing well.
That's fantastic. Just give me a sec, and I will pass it on to you.
Shall I share my screen? Oh, no. Okay, I wait 1 second.
Yep,
now I can share my screen.
Try now.
There we go. Okay, perfect.
Thank you so much. Thank you so much.
So, yeah, okay, hello, and welcome to today's session. I really look forward to it. So I was a little skeptical, to be honest, because we have a, let's call it difficult trading environment right now. So not in terms of volatility in general, but more in terms of the current given in the market with Jackson Hole here and the speech from Jay Powell on Friday, respectively tomorrow, the second estimate for the US GDP growth rate for the second quarter. And these two data points are, or let's call the GDP numbers a data point, and the speech from Jay Powell probably a fat event to some extent. Probably that's a good way to put it. This is very interesting given the overall macro environment we find ourselves in, and given the current expectation, not just in terms of inflation, but also what will the Fed do at their September meeting. That means that it's quite difficult to spot markets to trade. And so I will give you today an idea on how to spot these markets. So what I look for and why certain stocks could be of interest today, what needs to be shown, or what we need to see to let a stock really become hot, and then to find yourself in the most interesting markets in this environment, even though even though I have to say, not being skeptical from my end, because usually you want to have as many markets as possible to look at. Right now, probably this is perfect, because now you really can see what will happen once volatility dries out, and what you wanna put an eye on here, to really spot the best possible trading opportunities. And so that brings us to today's presentation. It's what is hot, what is not, preparing for the US market opening. Before we start, respectively, before we start, I don't need to give any deeper introduction to Appnauts anymore, after Theo already brought to you the broker behind the series here. What's in our case very important is certainly that if we now have a trade or formulate a hypothesis, please be aware that this is for educational purposes only. That means if we make a trade, or if you make a trade, you take full responsibility for the trade. This is just to give you an idea on how to spot trading ideas and formulate trading setups, and then taking it from there. So please keep this in mind once we here go through the charts, and also take this probably as a guideline for the rest of the week, especially tomorrow, with earnings being released here from Nvidia after markets, but also there will be a Snowflake, which will a company which will report earnings here. And now head over to the trading session, my overall setup here. And in this context, I'm having an idea here in this context on what do I want to have on my screen, first of all. So this is my trading window here. So you can see it's JWN, it's Nordstrom. This is the stock we will focus on. And I've already prepared it here so that I have 25 minutes from here, that I have an idea on what I look at, where we stand in the market. And I also entered, for example, the position size I want to take. If I take a trade based on volatility, given the levels we want to, or I have already defined, and I will walk you through this, how to do this. So this is a 5-minute chart here in this context. In fact, the trading decision is on a separate chart. In addition to that, also something I will show to you. Therefore, I will use an external source with a real market data is probably a wrong word, but the real volume, which is traded at the stock exchange, in this case at the NYSE, but also at other stock exchanges, so that I have real volume showing and popping up in my chart, where the main volume is traded. In fact, this is something I use where I use an external source. It's from TradingView, something which is easily accessible. To just check out tradingview.com, and you will have a chance here to do very, very sophisticated research, in addition to what you can already accomplish here with the MetaTrader 5 environment. So then I have the H1 here. So this is a shorter time frame. We can see here already that we're in a range. It's a choppy environment, so there's no breakthrough or breakout on the upside, on the downside, trading within the range. Even though right now we are trading here at the lower part of this range in the pre-market, because the earnings were okay from Nordstrom, as we will see, but the guidance wasn't that good. And here that's resulting currently in the pre-market, the stock trading around 20, and with a gap down of more than 10% on the downside. So in the lower part here of this range, which is also interesting, because now we have here on the right, we have the daily chart also displayed. So 5-minute, 1 hour, and daily chart. And there you can see that here the region around 20 seems to be quite interesting longer term, because if we break below that level, there's some room probably down to 19 around this level. And if we break this, and this is most likely what a trade will aim on, in fact, and I will also present to you a strategy or a setup which I formulated, and the strategy behind this. You will see here that if we break below that level, so then there's lots of room on the downside. So you can really expect some momentum coming in if we break that level. So to have an overall overview of where we stand in the market, I really like to display the stock I plan to trade. Stocks depends on a little, but first of all, I'd say focus on one, probably 2 stocks, and not too many, to not be overwhelmed by all the information you have to deal with. And then taking it step by step to 2, 3, 4, 5 stocks probably, and different strategies. So in this case, we want to focus solely on one stock. Now, the thing is, you certainly wonder, how come that this guy's looking at Nordstrom? So why is Nordstrom of interest, and where does he go to find this out? Do I need to pay for this? Or no, you don't. You can get a quick overview of this on a website, which is completely for free. It's a pre-market screener from MarketWatch. The only problem with that is you have to opt to decide to get data over and over again. By the way, in addition to Nordstrom, there's also now another stock which is in play, which is hot, which is Peloton. Peloton just announced, it was quick, several minutes before we started the webinar, so I haven't prepared anything here. And to be honest, I'm not really sure if I really want to actively trade Peloton today. I certainly have it on my radar. I probably carefully watch also the price action here, which levels to keep an eye on, because I know that. Let me just see here. So this is my earnings calendar. You can also see here Nordstrom. Obviously, there was earnings yesterday after markets closed. And then we have, today is Wednesday, tomorrow is Thursday. We have Peloton here with news. And just 30 minutes ago, they came out with the following. So Peloton strikes a deal to sell fitness equipment and apparel on Amazon. And that was currently resulting in lots of action taking place in the stock. But before this news hit, and you watched here this pre-market screen. By the way, I will share here the link. I would call this PMKT, okay? So for pre-market, probably call it a screener. And then you can see it here. So check out this link. I check it out every day. So every day to get a first overview. It's starting already at 10 a.m. German time, so 10 a.m. CET. And you get then the first indications of which stocks are hot, which are not, or where's some active trading taking place. And before Peloton hits here, the screener at the top, there was only really one stock which was of interest, and that was Nordstrom. That was with here over 500,000 shares being traded right now in the pre-market, and a gap of more than 10% on the downside. So that's the first thing which appears here. So in case of Peloton, you can see it here, lots of action being done already. So there's no earnings like it is in a Nordstrom. So there must be another trigger. But this is exactly what I look at. So first of all, I want to see that there is lots of action going on. So volume needs to be elevated. And there needs to be a clear push on the upside, respectively on the downside. So in case of Nordstrom, that was the reason why this caught my attention. And then what I did next was, okay, I certainly knew this beforehand. So it's not that I look at this pre-market screener and then I'm surprised to see, oh, wow, Nordstrom has elevated volume right now in the pre-market. What's going on there? Certainly, I knew that they delivered earnings already yesterday. But even if you don't have an overview, you will find out very quickly that there were some potential fundamental there's the fundamental reason behind this. And then you can see here, okay, they delivered earnings, and then you take it from there. Obviously, market does not like the earnings, because if it likes the earnings, usually you will see a green, where like a deal, which the market participants like, you will see a green bar here and not a red one. And then you take it from there. First of all, before we now dig into the earnings themselves and interpret them, what we also want to make sure is we want to understand why elevated volume is of such high interest and why this is a good first indication. The thing is, you probably have read several books. You probably have also listened to several guys in terms of technical analysis and what to spot and how to, let's put it simply, how to identify a trend and then follow the trend. And so the thing with this is, that's completely correct, but the thing is, everyone can see this, and you will have certainly found yourself several times in the past in spots where you just watched a clear level, so like a breakout region, very strong resistance on the upside in whatever asset. So it could be a stock, it could be a crude oil, it could be Bitcoin, whatever, and you just look at this level, and then you see the market nearing that level. And then there is a quick pop, but no follow through action. So, and there's a fake out taking place. So making things simple here. And now you're frustrated. You say, well, why is there no clear follow through? Why is there, or why is at this and that level not, why can't I see the reaction I want to see at this or that level? Why is the market not behaving textbook like, let's say? So what I read in a book that if a market breaks resistance, for example, and retests that level, why don't we take on bullish momentum against that level? Why don't buyers step in here? It's such a clear level. It's so clear and clearly visible for everyone. Why that is, I can't answer that, but we can, and this is exactly what we do here in this spot. What we try to achieve by watching the volume which is traded, we want to see that market participants are clearly watching the stock right now, or watching a certain level which we are nearing, and therefore we here keep an eye on the volume. And so what I like to use as a rule of thumb is, or what I like to do is, I like to go over to finwiz.com. It's also completely for free. So let me just share the link here too in the chat box. Oh, where do we have it? There. So it's finwiz.com. And then what you do is you type in, after you spot it here that the stock is probably hot, it's JWN. Okay, so there's a sharp gap, volume is elevated, it's the most traded volume here in these laggard stocks, obviously. And then you say, okay, but I mean, lots of volume being done is one thing, but it's the relative number. So lots of volume, if you have a stock which trades something like 100 million shares on average every day, like an AMD or something like that, well, 500 shares is nothing. So you will also see here, if you scroll lower a little, let me just see AMD. No, today it doesn't appear here, but so 500,000 shares in a stock which usually sees a turnover of 100 million is nothing. So, well, but in case of a stock which, as you will find out on Finwiz, does on average per day right now, given today, an average volume here over the last 22 days, last month of trading, of 5.7 million shares. Then we talk about relative high volume, which is done already in the pre-market. And why is the pre-market of relevance? Well, what we try to achieve is, or what you probably have heard and read about in technical analysis books or in trading books in general, is we want to follow the big guys. We want to follow the money here, so the institutional players. And what we know about the pre-market is that these market participants are already come to life and start to trade quite actively if they are interested in a news, in a certain level, whatever. They already start to do this before Wall Street opens. So around 1.5 hours before the market opens. So 2 p.m. German time in this case. We see the institutionals coming to life. And if they then show interest in a certain stock, and thus the pre-market volume shooting up here, then things start to get interesting. And in addition to that, also very important. So we put this now in relation to the overall volume being done. We can say if there's minimum pre-market volume being traded of 10% the average daily trading volume. So in this case, nearly 500,000 shares being traded, then obviously this stock is of interest for institutionals. And then we take it from there. And then we say, okay, now we start to talk about an interesting stock. So we are very, very selective here. We're not trading every stock. We're not trading just, let's say, AMC, because AMC is talked about a lot. Or we don't just trade Tesla or Apple because it's Tesla or Apple and everyone is trading Tesla or Apple and there's huge user volume being done. But what we want to be sure about is that we have a stock which has a fundamental catalyst, an earnings release, and thus an elevated volume already in a pre-market. We've also seen, for example, putting it differently, yesterday, you can see it here in the Earnings Whispers calendar, which is, by the way, great. So it's a must follow. If you're on Twitter, then this is a must follow for you as a stock trader. You can see also there's Intuit, for example, yesterday with news. So and they, well, probably if they delivered earnings, then it should be a hot stock, right? Well, first that makes sense. Then you will look here, you see Intuit is traded pre-market. Yes, gap higher, 5%. They beat on the upside, on the downside, gave a strong guidance, everything cool. But less than 10,000 shares being traded. So market or these institutional guys are not interested in the stock. If they were, you would see more volume coming in, like here as you saw now, but probably that's a little too much because Intuit is not that actively traded like a Peloton, but still you would see more interest in the stock. If the interest is not given, well, this stock is not of interest. The structure itself could be really nice. So look at the Intuit chart. I gave it a quick glance. You will see that there is a strong resistance on the upside, 500, 510, potential breakout occurring and everything. But well, the thing is, as of now, there's not the interest you expect to see after earnings being delivered. Thus, you skip this and you look for, in this case, Nordstrom. So you're really you're cherry picking here in this context. So now we know the stock is hot. Okay, so it's lots of volume being done already in the pre-market. So we're more than 10%. Now you can see it already here. It's nearly 700,000 now. You can clearly see, okay, more than 700,000 shares being done with an average daily trading volume of 5.7 million. That's certainly a hot stock right now. And you know, given the chart here, okay, well, we're coming in around 20. So this is potentially a very important technical level. And this is then the information you need. Respectively, certainly you have to give the data itself a glance and have a look. And this is something I do here that way. I have an Excel file, which I just fill in the details every day. So you can see here, this is my ticker symbol, JWN. So I have the support resistance level. I'm watching. How I get there, we will spot in a few seconds. Then I have here the data itself, which they delivered. Let's just go through this quite quickly. So sales growth of 12% year over year to 409 billion against 3.95 billion expected. So beat on revenue. Adjusted EPS 81 cents against 7.79 expected, also beat, great. But the outlook for 22, the full year outlook here is below expectation. So expects revenue growth of 5% to 7% year over year. Prior expectations 6% to 8%, so lowered here. And also the adjusted EPS came in only at 230 to 260. What the management expects here against 320 to 350, also lowered the guidance here on earnings per share. So long thing short, so they already expect, well, lowered, yes, to some extent. They already expected, analysts expected a lowered guidance here, but they didn't expect Nordstrom to lower that much. Now, the question is, by the way, who is Nordstrom? What are they doing? Probably you've heard never before about this company. I prepared this already. Also, certainly something to keep an eye on. So Nordstrom, as you can see here, is an American luxury department store chain headquartered in Seattle and founded and so on and so forth. So, well, we're talking about which sector? Retail discretionary. So this is similar to Target. It's not consumer discretionary. We're not talking about consumer staples like Walmart, but we're talking about a sector which was already in place several weeks ago. So probably you followed the action on inflation expectations picking up, consumers switching their or changing their behavior in terms of what they consume, what they buy. Especially high inflation will see some negative impacts on luxury department stores like Nordstrom. So all in all, something you would expect to lower here. And now there's also something interesting I also want to share here. I mean, we are talking about one stock, but I already talked about the sector we are looking at here. So consumer discretionary. What you also want to know is not, you don't want to pick any consumer discretionary share now and check it out, but you want to have a look at the sector. And there's a great website here. It's tradingterminal.com. Let's just update the site once again. And then let me just guide you here through this. So what I look at here is the so-called sector's performance. So we know consumer discretionary. This is what we look at. So you don't want to have the performance from today. It's not today, but it's yesterday. So you can see, okay, consumer discretionary yesterday was kind of unchanged. Strong was energy. No surprise. You probably have seen Occidental Petroleum and so on and so forth. But we will look at the performance of the last 7 days. So we are day trading. So we are looking at the shorter time frame. So we're looking here at 1 week performance. And now have a look there. Consumer discretionary, one of the weakest sectors we looked at. So now you have everything lining up really. So you have a technical level around 20, 1950 around on the downside. You have a weak guidance. You have a weak sector given the last 7 trading days. Putting things together, I mean, we clearly come to a short thesis for the day. So we should definitely favor the short side more than the long side. And this is how you put things together. So you start really like with which stocks are hot. Okay, so pre-market screener, you see, okay, this stock obviously is hot, lots of volume being done. Market participants, institutionals are looking at the stock, gapping lower. Okay, great. Why is it gapping lower? Well, obviously it was an earnings release. We knew this beforehand because we prepared already on the weekend, and we know Nordstrom will deliver earnings. Probably had it already on the radar yesterday. So then, by the way, if you look at it in after hours and you see they deliver earnings, but there's a reaction, but there's no follow through on the upcoming day, then in the pre-market, well, you skip the trade also, or you skip the stock in this case and look for something else. Okay, well, now we have a stock which is probably of interest. You see that the volume fulfills the criteria of more than 10% of the pre-market volume in comparison to the average volume. So it's a really hot stock for today. Well, and then we know it's trading in a weak sector given the last 7 days of trading performance. 1 week performance, consumer discretionary was hit by whatever reason. I mean, main reason potentially because of inflation fears picking up again, German producer prices, for example, spiking higher, coming way above expectation. And this is also spilling over now to US equities, which is kind of surprising. Usually you expect German markets to react on news from the US, not the other way around. Then we have Jackson Hole. Market participants are hoping, seeing to see some input in terms of what to expect from the Fed then. On their not just in September meeting, but also into the yearly close. And this is also here hurting inflation expectations picking up, consumer especially the luxury sector, let's call it, which is affecting Nordstrom then in this case. So, and then we take it from there. And now the thing is, we don't have any data so far. So we don't have the data in the pre-market here in the MetaTrader 5. This is something you have to be aware of because the pre-market now is also, this is of interest because the more volume is traded, the more relevant the pre-market levels are. And now you can see here that I have orange, respectively blue color in my trading view chart. So this is already Nordstrom here, the stock. And so the thing now is that I say, you know, which levels are of interest in the pre-market. So where we clearly see that buyers stepping in or that there's a resistance or something like that. And then I use these levels and there you can see it. So we have some kind of resistance here around 2050. So this is the region, which is in the pre-market of interest after the earnings were released. You can see that 20 here, probably a little lower, 1985, 1990, something like that, make it a round number. 20 is a potential inflection. You can also see here, this is the this moving average. It's not a moving average, but it's the volume weighted average price we look at here. The volume weighted average price in this case gives us an idea on how much volume was on average done on every price. And thus you get an indication of how market participants are finding themselves underwater in a position or however. So, and then you can see here 1950. This is not visible, but if you zoom out, you will see if we zoom out here. So that was the most recent low in July. If we break below that, as we do right now, already in the pre-market and keep below that level, that's a reason to believe that there's more selling to come because there's no support, as you can see here in our daily chart on the downside. As low as 15, probably we're closing this gap in the days to come, not necessarily today, but as low as 13 then. So there's no support and inside anymore on the downside. And this is how I get my levels. And this is then what I write down here. And as you can see here, then I formulate a game plan based on the infos I have. So you can see it here. So gap. By the way, I would just have to type in these data here. Let me just check. So it's 1 million shares being traded now, minus 1647. So minus 1647. Oh, that wasn't good. Let me just 1 sec. So minus 1647, 1.1 million shares being traded, bringing it to very elevated levels. I have also the ATR here, so what to expect on average the market to move for the day over $1. I have also the short percentage and the institutional ownership. So this is a problem, let's say, because the institutional ownership, once it becomes elevated and it's above a 20%, you have the problem that someone is probably covering its shorts, and thus there could be a short squeeze as a result. But we will certainly focus here on potential scenarios now, because we're heading into the market opening, and I can make long thing short now, because the pre-market has shown us already what to expect. Bearish opening potentially, and going down to the 1 minute chart here in this case, by the way, because we are very short-term oriented now. And what do I want to see? Well, I want to see the stock now coming in, holding below 20. That's the game. That's what I want to see, and having a stop here above the pre-market high, which you can find at 2040 around. So which means, like, we get to see a pop on the upside, and once we hold below 20 and roll over again, and break back below volume weighted average price, respectively the opening print, I want to be short the stock in this case. And then going in this case, this is also something which you want to make sure that you know it beforehand, is what do I want to trade? In this case, I'd like to go for a so-called momentum scalp on the downside. So I don't want to take a position for several days and really betting on this gap, as we spotted it here, to be closed and so on and so forth, because my research isn't deep enough. And in addition to that, we have also these fundamental trigger events into the weekly close. GDP, we have Jackson Hole with the speech from Jay Powell. So I really want to keep things short, respectively. In addition to that, I have also an overall bullish bias on the market. So I could really imagine that after the recent corrective move on the downside, stocks are about to pop, which is one reason why it would be a little, why I'd really like to be really careful in terms of short engagements. And I want to keep things quick and dirty to some extent here, and trade to short side. So now I also like to, let me just go over here. I like to make my opening price visible. So this is now the opening price. So, and now, well, now we have to wait. As you can see here, there's no trading taking place so far. This is because there is a delay of 5 minutes. The reason for that is that the liquidity providers here have to wait and see whether they can hedge the exposure, respectively, find enough pieces which they can forward then to the client who wants to go long, respectively short. And that's why you see a delay here of 5 minutes, and we have to wait still 5 minutes. But the plan is clear. So given what we went through here, and having our clear picture, well, once we hold below 20, respectively, probably a little wider below 1950 around, we have a reason to think that we have room to go on the downside. So this is why we are short the stock. And then now you can see, by the way, so this is a very, very illiquid environment all in all. So now you see the pop here, and this is now great because we know that the pre-market, or respectively yesterday and the after hours, the 20 has been a relevant level. You don't want to be short the stock if we make it above 20, by the way. So this is also something to be aware of. So you can have a short thesis, but this doesn't necessarily mean that you trade the stock from the short side. But now you want to wait for a clear sign, confirmation that there's no real walkthrough on the upside or potential for a reversal. So this is very interesting because now you see the pop here of 50 cents on the upside, but the stock having already trouble in the region around 20. So now we can also adapt a little and use here our information around the market opening, what to do with this. So we keep below 20, the pre-market, it's not really the pre-market lows, but the after hours lows. And we can use here this orange line for a trade hypothesis. So you could say, well, once we drop that, it's a clear sign that we are obviously weak for the day. We, in this context, also drop below the average price, which was paid in volume terms from market participants. And then you know that you're wrong once the intraday high is penetrated again. So which means, like, if you have the intraday high around now 1990, around 20, you're shorting here. a break below the opening print. So you set a sell stop, for example, on the opening price at 1930. Place your stop here above the highs, and then take it from there. And then you will probably wonder, okay, how do I manage a trade if I'm in trade now, and then I want to trade the momentum on the downside, and then play for a quick strong move lower here. So how do I trade this in this context? Or how do I manage trade? That's something I refer to as momentum scalp. I really prefer using the so-called EMA 9 in this case. So something I have already prepared here. So this is this moving average line. It only comes into play the moment once we enter a trade, if there's one. So I use this as an exit tool, let's say. Let me just see if the stock saw some kind of, for example, let's take this one here. So let's assume we had a trade already yesterday. So whatever reason, why? Well, let's say we just shorted the drop back below VWAP for whatever reason why we shorted it here. And then we say this is a momentum scalp, or a trade where we only trade the momentum here below the volume weighted average price, and keep the position as long as we trade below this moving average. So and this is a perfect example, as you can see. So we enter around 23.95 and keep the position here for, this is 50 cents or something. And if we push back above and hold above, then you don't want to be short anymore, because the short-term momentum on the downside is dying down. So this is the first sign. And this is how I use the EMA in this case, and how I would work with this moving average here in this context. So, and so as you can see here now, we're topping out around 20. And now we are rolling over. And so now, well, what we could certainly do, there's something like 50 cents risk, 55, 60 cents. So let's just throw in, I think I really like this trade, to be honest. I really do. So let's do the following now. So we know that 50 cents, something like, I don't know, what would you, let's do 30 stocks or something, risking $10. Okay, so just a quick and not too big position, just for illustration purposes. So once again, this is purely educational. Okay, so we set a stop now at 1985. Yeah, around 95. Did we say? So we have the stop now, as you can see here. Risk is $16, whatever. And we're not setting a take profit now. And if I'm getting filled, and if the stock drops to new intraday lows, then I start to manage the trade here with my, is the stop correct? Let me just see. Probably giving it, yeah, that's a good way to do it. So now what we want to see, if we drop the opening, we want to see a quick move lower. In case of the stock. So now we've got a fill, as you can see it here. So now we're shorting, and as you can see here, by the way, so we are breaking above a key support on the downside. Okay, so we are now breaking a key support, which is also probably giving us some room, further momentum on the downside. So what we want to now do is we want to manage the trade with the EMA 9. And in fact, that's it. So the trade is managing itself. Probably that's a good way to put it. So first of all, we have a stop here at the highs of the day. So if we make new intraday highs, and if we recapture 20, we don't want to be short anymore. We are then holding also the opening print in this context. So now we want to see bears coming in, stepping in, and pushing the stock lower. There's several reasons to believe that we are weak for the day, not just because of the weak guidance, but also the overall sector is weak. And in fact, that's it. And we want to keep the trade as long as the market opening phase is open, and also the momentum is on the short side, which means nothing more than once we are now pushing here back above the EMA, probably we have already a first reason to cover part of our position, but give it some room. So it's not that we are too aggressive here with our stop management. Give it some room to develop. Let's see whether it plays out or not, and then keep the position here with a stop above the intraday highs, and then just be patient. That's in fact yet now the thing what we want to focus on. Any questions? Any questions from your end? So well, I guided now. I guided you through. Let me just, by the way, take this chart here on the side. So I have it here. If there's any action happening, I prepared something else to spot a stock or to get an idea on why something could be of interest. You probably have seen it here in my sheet. You see XBI. This is an ETF which is tracking the biotech sector, and which was very, very interesting. Which was very, very interesting over the last weeks. Yeah, in fact, weeks. It first came on my radar several weeks ago, in fact, already, after a strong breakout higher. So let me just here guide you through XBI, and then we have already a chart. We have already a chart here. As you can see here, there was a strong line of resistance around 85, 86, and then there was a strong breakout higher and a walkthrough of nearly 10 points on the upside, 95, and then we pulled in, and that was interesting because that was at the beginning of August. That was at the 4th of August, somewhere here, 5th. So it's nearly 3 weeks ago. 3 weeks ago around, and on a weekend I was doing my research and then just wondering, okay, which stocks could be of interest, where did we see some action in the last days, and so you have here on Finware's website for free. You can also there's some paid services, but the for free stuff is already enough. In fact, you have the possibility to use a so-called stock screener, and that day I was I'm filtering here the order. You can order it, and then I said, well, I want to see a change in descending order, and then I want to see the stocks which hit a new high. So as you can see here, there's right now there's no clear pattern visible. Let's put it that way. So there's no clear pattern showing you a sector which stands out. Okay, energy. There were some stocks yesterday making new highs, several stocks, but that day when I checked out this screener here, this sector was nearly 100% biotech, respectively healthcare, and here in the industry biotech. And that was kind of interesting. I was really interested. And there was a winner here. So number one back then was GBT, a stock I never heard about before. Respectively, I then realized I heard about it before, but I never had it on my radar. And GBT was about to be acquired from a company named Pfizer. GBT is short for Global Blood Therapeutics. And they saw this announcement on a Friday. There was a news on a Wall Street Journal, and then we saw this sharp push higher. And what I also know is, or what I realized then is that the XBI, the biotech ETF here, has something about 3 million shares in GBT. That's very interesting. And then I saw this push higher. And I said, well, obviously, I don't want to chase now. I don't want to jump in and buy the stock or buy the ETF here. But there's certainly a clear sign of, after a very, very weak run here, given the developments from early 2021. So really collapsed and lost 30% of its value. And it's an ETF, so it's not one stock. And then we saw a strong reaction here. And now after this breakout and the retest of this region, I said, well, if we can hold this breakout region around 85, 86 something, then I'd be really interested here in buying the stock. And so right now, by the way, let me just check to where do we stand on the stock on this ETF. So it's 88 around. So yesterday we saw this break higher. So by the way, here's the trade as of now, so 90. Let me just see. We make new intraday lows. That's interesting now, because now the thing is, now let me just guide you through this. So the interesting thing now is about you can see here, you want to see new intraday lows now. That's what you want to see. So usually you see a pop and then drop lower, then you pop again, you sell off again, and now walk through on the downside is necessary to really confirm that there's bearishness. So as you can see here, we have trouble to break on the downside. So I don't want to be too aggressive with my stop now, because this is my stop management stop here. don't want to place the stop here above where with the EMA and really placing it on break even. But what I want to do is I don't want to see here the volume weighted average price being recaptured again. So that means that I trail my stop now from the intraday highs, taking out 30 cents of risk, and saying something like the main risk I'm willing to take is above this stuff candle here, probably 1960, somewhere around this. So trailing the stop here, because it's a momentum trade, this is also something I don't want to be too aggressive with the stop. If I'm how can I say that? If I'm swinging a position, usually I have a higher time frame, so I give them the trade room to breathe. In this case, you don't want to be too aggressive with the stop. You want to be more aggressive because it's a momentum scalp. So you're really trying to capture the intraday momentum and the potential scalping opportunity arising around the market opening. And if it doesn't play out, well, you're quickly in, you're quickly out, and that's it. And that's why I'm more aggressive here with my stop. Let's just see if we continue to push lower. Yeah, and keep it that way. But coming back to XPI, so XPI is around 88 now, which is nice, by the way. So you can see here I have also a small position there. And the interesting thing now is, as you will see here, this is the trading chart. Let me just zoom out a little. We've seen here around 87.50, around 87, 87.50. We bottomed out to some extent here around 80, 85. And I could really imagine now, after this breakout region was retested. In fact, let me just, by the way, also get you the XBI charts there. So XBI is there. If we're now seeing a bounce, I could imagine that we are going as high as 95 again. So this is a longer term trade. I opened it yesterday when I was, first of all, because knowing today I have a webinar here and I want to show you something, give you some illustration. Now we also have a trade in a JWN, but in this case, it was also something I really liked from an analyst perspective, because this is an idea how you can prepare for the week. So in this case, you can see it's a very creative work in this case. So it's not just really having a news ticker and having news, but there's also technical patterns which occur. Given fundamental drivers, like here, the acquisition news from Pfizer in terms of GBP, thus all pharmaceuticals, respectively biotech stocks popping up, and then saying, well, this is interesting. And then you see the breakout, you see the elevated volume, you see the bottom forming, and then you say, okay, if we get to see a retest here of this region and the region holding, then I'm scaling into a position and going for a retest of the most recent highs we played out and take this as a swing position, for example. But the main reason is I want to show you here how to use such tools like a stock screener, which is available for free on websites like Finwiz, for example. So going here, clicking on screener, and then you have plenty of ways to I'm sorry, plenty of ways to individualize this. In my case, it's the change for the day and then in the descending order and showing me the new high stocks. Oh, I'm sorry. So in fact, I think this is it. I'm losing my voice now a little, which is not so nice, but so let's see if this plays out. So the XBY is a swing trade, longer trade position. Here we have a momentum scalp. We were already trailed the stop. Now we can see here that we slowly made new lows, but holding 19 right now. Let's see how this plays out. So I mean, there's no so much risk involved. We already have 30 cents taken out of the risk. We don't want to be going back here. We don't want to see now VWAP being recaptured. Interestingly enough, I'm not placing too much emphasis on this because it's most of it is right now is noise, but holding EMA 9 in this case is also holding below 20. We were probably not yet done in Nordstrom on the downside for the day. So this is definitely something I want to keep an eye on. I'm out here once we take out 1950 and going above this stuff kind of, but could imagine it to run a little on the downside. Let's see. So that's it from my end. So I just hope you enjoyed this webinar as much as I did, or as I had fun presenting it to you. And if you watch the recording now on YouTube, leave a thumb up here. Subscribe to the YouTube channel. Please find the also find the time to leave a comment. If you have certain setups you want to see discussed, or topics you want to see us presenting to you, we'd be more than happy to deliver. And that's it from mine. So I wish you all the best. Happy trading, watch your stops, and talk to you next time. I really look forward to it. All the best. Bye-bye.